All right, okay, you are not going to believe this figure. $16 billion.
Wow.
Yeah, with a B. That's the scale of the bet Wall Street has on live cattle futures right now. As of late April, we're seeing about 120,000 net long contracts.
Net long, yeah. That's significant.
Right. And, earlier in the year, January, I think, it peaked even higher, almost 157,000 contracts.
Incredible. So a huge amount of money expecting prices to keep rising.
Exactly.
Mm.
So what is going on? Why is everyone suddenly so bullish on beef? And what's pushing prices up so much in 2025?
Well, let's dive into it.
Yeah, we've got market data, expert takes. Let's try and unpack this meaty situation, because it's not just speculation, right? There are real things happening.
Oh, absolutely. It's fascinating, really. You've got a convergence of factors. Fundamentally, it boils down to that classic story, supply and demand.
Okay, the basics.
Right. But with some, let's say, significant twists. On the supply side, well, things are tight. Really tight.
Because of the drought. I keep hearing about that.
Exactly. Years of drought, particularly in key cattle regions, have really shrunk the national herd size. And it's not just the drought itself, it's the knock-on effects. Feed costs have been high.
Right. Expensive to feed the cows you do have.
Precisely. So ranchers are understandably hesitant to invest heavily in rebuilding their herds quickly. It's expensive and takes time.
Okay, so supply is squeezed. What about the other side? Demand.
That's the other, perhaps slightly surprising part of the equation. Demand for beef has stayed remarkably strong.
Even with higher prices.
Yeah, even with higher prices. The job market's held up relatively well, so consumers overall are still buying beef, maybe cutting back elsewhere, but beef demand seems resilient.
You can see that reflected in the actual prices, right?
Absolutely. Look at the cattle prices, they're high. And boxed beef, that's the wholesale price for cuts of beef, surged past, $333 per hundredweight recently?
Wow, over $3.30 a pound wholesale.
Yeah, that shows you the strength right there.
Okay, so fewer cows, but people still want their steaks and burgers. That makes sense for rising prices. Now, let's maybe shift gears a bit. How does the bigger economic picture, like what the Federal Reserve is doing, fit into all this?
Yes. The Fed. That's another crucial layer.
How do those high interest rates play into the cattle market specifically?
Well, think about it from the rancher's perspective again. The Fed's been raising rates to combat overall inflation, right?
Right. Trying to cool things down.
But a major consequence is that borrowing money becomes much more expensive. So if you're a rancher thinking about taking out a loan to buy more heifers or invest in infrastructure to expand...
It costs a lot more now.
Exactly. That higher cost of capital acts as a brake on herd rebuilding. So, ironically, the policy designed to fight general inflation might actually be making it harder and more expensive to increase the supply of this specific commodity.
Huh. So it kind of tightens the supply knot even further.
It definitely contributes. It's a constraint on expansion, adding to the upward pressure on prices.
Which, of course, ties into the bigger theme we've all been grappling with, this stubborn food inflation in 2025.
Precisely. Beef is like a poster child for these broader inflationary pressures that are hitting everyone's grocery budget. It's not happening in a vacuum.
Okay, Wall Street's placing massive bets. Our wallets are feeling it. Let's make this really tangible. Maybe we can call it our burger index.
I like that, the burger index.
Yeah. How are these soaring cattle prices actually hitting the cost of, an everyday burger?
Well, it's pretty direct, unfortunately. Higher prices for live cattle mean higher prices for the processor buying those cattle.
Great.
Then higher prices for the ground beef coming out of the processing plant. That cost inevitably gets passed down the chain to the grocery store, to the restaurant.
So that burger you grab for lunch or the patties for the weekend barbecue?
The beef component is simply costing more. So yeah, your burger is likely getting pricier. Those summer cookouts might have a bit more sticker shock this year.
Ouch is right. Okay, so we have tight supply, strong demand, Fed policy adding pressure. But, things can change. No market goes up forever. So what could potentially derail this cattle rally? What are the risks?
Good question. There are definitely factors to watch. For one, seasonality. Beef demand often peaks during grilling season and holidays. We could see a dip afterwards.
Natural cooling off.
Potentially, yeah. If that dip is sharper than usual, it could take some steam out. Then there are the bigger macro shocks.
Like a recession.
Exactly. A serious economic downturn could dent consumer spending across the board, including on higher-priced items like beef, or, unexpected, maybe more aggressive moves from the Fed could also change the landscape quickly.
Right. Economic uncertainty is always a factor. Anything else?
Well, the sort of best case scenario for prices coming down would be faster herd rebuilding, but that depends heavily on conditions improving, like sustained rainfall breaking the drought pattern.
Which seems unlikely in the very near term, based on what you said earlier.
It usually takes time. Yeah. Significant herd expansion isn't typically a quick fix.
Gotcha. So, stepping back a bit, it sounds like there are two really interesting big picture takeaways here regarding inflation and the Fed.
I think so. The first one for me is how clearly this cattle situation shows that broad macroeconomic policies like the Fed hiking rates to fight general inflation can have these really specific, sometimes counterintuitive impacts on individual sectors.
Like accidentally making the beef supply problem worse.
Kind of, yeah. Or at least hindering the solution. It highlights that these tools aren't always surgical.
That's a crucial insight. And the second one,
The second one is about demand resilience. The fact that consumers are still buying beef despite these higher prices, it really complicates the picture for tackling food inflation.
meaning it's not just about tweaking interest rates.
Exactly. It suggests consumer behavior, preferences, maybe the overall health of certain consumer segments play a huge role that monetary policy alone can't easily control. There's more going on beneath the surface.
Right. Okay, so just to quickly recap for everyone listening, Wall Street's massive $16 billion bet on beef, it's grounded in some pretty solid fundamentals, for now anyway.
Yep. Tight supply from drought and costs.
Surprisingly strong demand. People keep buying.
Uh-huh.
And Fed policies, while aimed at inflation overall, are kind of making it more expensive to fix the supply side.
Putting it all together. And
Yeah.
that's why we're seeing these prices.
At the grocery store and on our burger index.
Indeed.
Okay, so here's a final thought for you listening out there. Really consider how something like a Federal Reserve decision, which can feel very abstract, connects directly to the price of food on your table.
Yeah, it makes you wonder what other markets, maybe things that seem pretty stable right now, might be subject to these kinds of hidden pressures.
Absolutely. And maybe this prompts a question for you.
Mhm.
Have you personally noticed any really surprising price jumps lately on everyday items? Sometimes it's those little things that signal these bigger shifts.
We'd actually love to hear about it. If something's jumped out at you at the checkout, share your thoughts. Let's keep this conversation going.